Jason, thanks so much for joining us. Just talking about some of these big cap tech stocks and whether they can continue this run. Do you think that earnings is a risk for them, an opportunity, or irrelevant, given that they're so momentum driven at the moment?
Yeah, thanks for having me. I really think that a lot of these mega tech stocks there's so much opportunity here, and what we've evaluated here at the firm is really the decentralized labor force that we've seen as a result of COVID-19. And we believe that these names will have quite a bit more run. Particularly Microsoft is one of the names a legacy name that we follow very closely. You know, very strong balance sheet, strong cash flows, and I believe it's one of those names that most of our clients are very familiar with. They understand how they make money and how they do well in this environment, and along with their products suite of services and what they offer. Fares very well in this climate, and I think they'll continue to do well.
So that's Microsoft. I see on your other ideas, ServiceNow, DocuSign, Twilio, whether we threw in some others like Zoom as well. Are you concerned about any of those smaller, relative to Microsoft, tech companies that have also had just outstanding share price performance? Are they at risk of seeing some market share lost to the big players who perhaps can see how successful they've been, if we talk about DocuSign, for example, or Zoom, and start to kind of eat into the extraordinary multiples that some of those smaller tech cloud plays have earned themselves?
I absolutely think it's possible. We really like ServiceNow as well. Automated workflows and the ability to connect with employees interdepartmentally, across businesses, I think is going to be important. Again, I think companies that are continuing to be innovative in this environment will continue to fare well. And I think there's still a lane here. I think there's still a lane to run, and time will tell, of course. But yeah, we like them. We like them as a firm.
Jason Snipe, thanks for joining us. Jenny, I know you don't love the high multiple stocks. If you have to go into some of these tech names, which would be your preference?
Sure. So we do own Facebook in our disciplined growth strategy, and we own that because it's cheap, it mints cash flow, and it has solid earnings ahead. But I think cheap relative to peers is a really key element there. Besides that, we own companies like Cisco, Intel, IBM, inexpensive, high free cash flow producing companies. That's where our comfort is.